Taking a look at natural gas, we have further consolidation. But before we go further, a quick word from our sponsor. This video is brought to you by NatGas, the world's largest retail broker, offering ultra-fast execution with no overnight fees. Find a link in the description below. This is Bruce for FXEmpire, taking a look at the daily chart for natural gas. So a couple things. Number one, we have a bearish divergence. You see our RSI, and you see that that happened before this high was established. We have bearish divergence on the RSI. We have a breakdown below the purple 20 moving average and the uptrend line, and then we have a test of resistance, resistance, resistance. The last 4 days, this is classic bearish behavior, but only if there is a drop. So that drop would be signaled below 3.955 support, which is around the 50% retracement. And it may lead to not much of a continuation on the downside. It depends on how these price levels, uh, how natural gas behaves around these potential support levels. First being the 50 moving average at 385. The second being this swing low here at 374, along with the 61.8% retracement at 372. But we should also take into account this previous resistance at 364 becomes potential support on the way down. Of course, a break below the swing low is a reversal of this trend, putting natural gas in position to potentially test this trend line at some point. Of course, the trend line, where the trend line is at the time of the breakdown, will depend on the price. And it certainly could be up here before that happens. We have to wait and see. On the upside, there's nothing happening on the upside unless it's a decisive rally above the 4-day high of 422. At that point, it heads up and potential resistance along the trend line. And, excuse me, last Wednesday's high of 338. All right, that is it for natural gas traders. Have a great week.